Hey everyone, welcome back to CryptoCache. Thank you so much again for joining me here. Hope you're having a fantastic day. One more look here at Avax, double checking some important factors here this weekend. Keep in mind Bitcoin is on a slight pullback and Avax is doing very well contrary to that. It's typically a very good sign. Just keep in mind if Bitcoin finds its bottom, sometimes Avax or coins that are performing well contrary to Bitcoin, they'll reverse in polarity. So basically, we almost have like an inverse pairing here for the moment. So we'll talk about that and a few other key factors. Generally, that's favorable on a bearish type of weekend, at least, Bitcoin pulling back from its top of 60,500 once that liquidation level has been swept. So we're going to pull up some liquidation here for Avax, see what's going on. I do want to say thanks again for the awesome feedback from my community here. Glad this working out well. Good 42% from Bitcoin, SUI 84%, and of course Cardano 32%. There's some really good solid trades here this last week. Again, most of them just based on being patient and respecting kind of the charts, if you will. Because again, you never want to force a trade, but you also want to make sure that you're not overly patient. However, most of those trades were, all of those trades were taken with confirmation. Let's take a look at AVAX. Let's see if there's any confirmation we want to go up or down with this coin. First of all, there's a lot of late shorts here ever since the price reached this $25 mark, which makes sense. It's kind of a key round number. We can see 26 upwards of 26.40 as some upper levels of liquidation. We zoom out and in essentially into the last 30 days of liquidation. We can see we got about quarter billion between two of those. Actually, we'll just add all three of them up. That's basically what, 660 billion between now and 26.50. Okay, so 26.50, even $27 has a lot of liquidation. Those are like low leverage shorts. We can see here right in that range. So basically, you could round up and say basically there's about $1 billion in liquidation between now and 27.40. So 27.40 is upwards of about this range here. So we got some liquidation in this area. Just kind of give you perspective on where we're at there. So again, that's an upper liquidation level. We'll just go ahead and put that in there. Liquidation 1B plus. All right. Cool. So that's kind of where we're at there. We'll pay attention to that later. I'll post that on our playout chart on our Twitter, Telegram, and Discord. Between now and then, what we want to discuss is a few other things too that I think are extremely important, such as the daily time frame, the simple moving averages. When we last looked at this here, we're in a position where we had some really, really close calls, but also, we're also trying to consolidate and close above those important ones. The important ones, in my opinion, is the 20 and the 50-day SMA. Those are just kind of like the initial trendsetters. The 100-day SMA, I could take or leave. That's me personally. I haven't had a ton of success with it, but we're tentatively rejecting off that level. It would make sense that would be somewhat of a resistance. But again, SMAs are not resistance or support levels. They're just kind of areas we want to pay attention to. We're basically just telling us here that anything over $23 is a good value because we're over that support, right? And that support range, it always changes, always consistent. Or it's inconsistently consistent, if you will. But the key here is as long as you're above those two, in my opinion, both of those, then you're in much better shape. You're going to find more success trading to the upside than the downside. That's not to say the price cannot still pull back from where it's at down to that level. All right, we got to recognize that there is a fair value gap just below that. However, just because a fair value gap or liquidation exists doesn't mean it's going to happen. Okay, that's why we look at everything in combination with that. It's the same premise as those who just only use, they solely use Elliott wave, for example, right? While fib levels are important, they're not the only part of trading, okay? Make sure you diversify. You want to look at a lot of different things here without getting too crazy. Also, try not to be one of those persons that uses 50 different time frames. You're really going to find a lot of confirming factors if you look on more time frames. It's like when you buy a car, you see the same car on the street all the time, right? Because you're more aware of it. That's all you think about. If you can diversify a little more, you're probably going to see a lot more. So maybe research further, right? Anyways, random bits of knowledge. I hope that helps you in the later future timeframes. Stochastic RSI is swinging up for the second time. This usually carries more weight than the first. We can see RSI over 50. Money flow index is high. That's the important thing here. MFI being high generally implies you don't short into it. We are, however, seeing three white soldiers essentially. When you see three strong green days, you can typically see a fourth day to follow. So we may see a fourth red day tomorrow. Would make sense considering, especially if Bitcoin increases. I would venture to guess AVAX would decrease, which I know sounds weird, but when coins pair themselves inversely, in other words, money flows away from Bitcoin and goes into specific altcoins like this one, for example, we will start to see that taper off once Bitcoin finds its bottom. Having said all that, take a look at the 4 hour. We can see we're honoring our ascending trend line, running specifically concurrent with the 20-day SMA. That's the trend setter, in my opinion. Being over the 20 on the 4 hour, specifically the 4 hour, and also the daily. Nice confirming factors there. it lets us know that we're absolutely on the right side of the tracks right now, okay? So again, it doesn't mean you just blindly take a long right now at the potential top. It just tells you that, hey, we're on the right side of the tracks here. Taking a short is not really a great idea because it's more likely to increase than decrease, especially with almost $1 billion in liquidation just above the price action, okay? So there's that. Keep in mind, Bitcoin did the exact same thing where we had, 50 billion liquidation at 60,600, and the price just wicked up there perfectly. We've got new liquidation levels, of course, forming because everyone's, short. Trading wouldn't be trading if it wasn't for short sellers, right? So that's what this is. This is basically just incentive for the whales to push the price action higher because short sellers are highly addicted to short selling, right? There's not a lot of confirming factors as to why that's the case, but anyways, we can talk about theory another time. Let's discuss this here, the 4-hour time frame. Minus the moving averages, we're also testing 70 on the RSI. Generally, that's construed as a resistance. So hypothetically, if you're to short right now with tight targets, you may have some success considering that's a resistance level. However, once you break free from that level, the price will continue to run. It's very, very consistent when the price breaks above 70 for it to stay above 70 for a while. All right, and just give you an example. The last time this happened, when the price broke above 70, it went from right here to right here. See, this is above 70 right there, okay? So crazy cool things happen when you break over that level, and we're right on the verge of that happening. So it may be best to be patient and wait and see if that occurs, right? Once more, we're probably going to get confirming factors in the hourly, letting us know that we have no reason to consider a short, which is absolutely 100% true. Okay, so if you're in a long right now, you do not want to consider closing your trade. There's just no other way around it. Minus the fact that we have somewhat of a resistance range here at this 25.50, based on a few other smaller handful of confirming factors, we're not massively overextended here. If we take a look at the hourly, we still got a couple of hours left. In fact, good 3 to 4 hours left before we hit our top. And we break free from 70, we're probably going to run towards this next fib level at about 26.40, 26.42 to be precise. So there is probably more chances the price is going to continue higher moving forward. How much higher? It's hard to say specifically. We can look at different Fibonacci retracement levels to identify. Again, 26.40 or 28, the local high would make sense. And if you're going to consider taking profits in those areas, just below these levels is better. Don't just wait to that exact level, because every time you choose a round number or a specific level that's been tested previously, the price will either jump past it or just go right below. The odds of getting filled is less, and it's not ideal. So again, you're going to be in line no matter where you're at. You may as well be in a short line than a long line, right? That's the concept. Okay, anyways, that's what we got here. Not too much else to really note. The most obvious thing here, the takeaway, is that Avax is looking pretty strong. There's no reason to consider shorting into it. While you might find some success, we're still honoring the ascending trend line until that breaks. There's no reason to consider shorting. Again, that's the general consensus. You should pretty much apply that to every single coin. You're going to be more successful. And I know right now, I'm sure there's people posting online how amazing they are by shorting Bitcoin at 60,600. You're going to find that everywhere. And they're the kind of people that are generally either watching the charts all day long, they're more so day trading, or they're just the kind that really have to have that sense of accomplishment by telling everybody how great they are. And again, that's not bad. Don't get me wrong. It's okay to be able to feel good about your trades. But again, those are probably some high risk trades, and if they are, I wouldn't trust it, because high risk doesn't make a ton of sense in this market right now. It's already high risk enough. Why risk it even more with extremely ridiculous leverage? You're going to get eaten up on fees. You're going to trigger so many liquidation events, it's not even funny, and it's going to hurt at the end of the day. Again, if you keep doing that, all good. You're eventually going to come over to my community anyways, so CryptoCache.tech is a site link down below if you're curious about that. I have a trading academy, community, and signals group. It's been a really, really good experience. I do want to recommend, too, of course, for anyone who's day trading and/or swing trading, check out BTCC as a secondary exchange. You should always diversify your exchanges and have day trading on one, swing trading on the other, okay? Never just try to pull it all from the same place. It's like trying to save money with one checking account. It's very difficult when it's all available in one place, okay? All right, anyways, friendly advice, that's all linked down below. If you want to join us over on Twitter, Telegram, and Discord, feel free to join us. Looking forward to working with you. Hope you have a good rest of your day. Thanks again for your time. Take care.